right here in the studio, we do have a special guest, as we said at the top of the program. Mr. Toyin Akinosho is the publisher of the Africa Oil and Gas Report. He joins me now to discuss the Petroleum Industry Act, plus I guess what we've heard from the minister. Sir, thank you so much for joining us. Really glad that you could patient us to join, just stick with us while we're listening to the minister. What do you make of his comments, and welcome to the program.
Thank you very much. Thanks for having me.
That's fantastic.
I think the minister has a personal right to congratulate himself on 2 years. When he talks about ticking off the boxes, he's done quite a few things. You have to admit that a minister that delivers the petroleum industry bill has done some work.
Right.
So one needs to congratulate him on that. I mean, I'm not so sure of several other things in those boxes he's ticking.
That's meeting his targets, yeah?
Yes.
Okay.
When he talks about cross-border smuggling, the jury is still out that the volume of products that we allegedly consume are not consumed by just Nigerians.
Right.
And that's fairly significant. I'm not sure that a minister needs to. If he can't deal with that issue, he doesn't need to come into a list of box ticking. It's not necessarily done right. Because, if you don't have appropriate pricing, you are subsidizing the other guys. And
incentivizing the smuggling, right?
It's a law of thermodynamics,
right.
Pressure drop, pressure flows to, the water goes to the lower. It's just a normal, so let's not. He should be very careful about those boxes he's ticking. But I congratulate him on quite a number of things. He was basically the Minister of State when Train 7 took FID. Even though, he came in 2019, the FID was taken in 2019. But, that's life.
Right.
He can congratulate himself. So I'd rather that he picks, the harmless part of the boxes to tick. He shouldn't be ticking boxes on the bid round. The marginal field bid round is the worst. There's the worst bid round that we have run.
The worst.
History. Yes, in terms of transparency. Bid rounds are taking place in Angola, and we know the people who won. It's open. You see names. The agency publishes names. Ask the minister, where is the list of awardees of the marginal field bid round? Where is the list of how can you run a bid round and we don't know
who is bidding?
Who won?
Right.
We'll publish a list. So that's there. I don't, I don't want to use the word dodgy or what,
right,
but,
of course.
But it didn't quite go well. So we're talking about the Petroleum Industry Act.
Yes.
People talk about 20 years. We should be very careful about 20 years. The bill basically got into the National Assembly in 2008.
Okay.
That was the first time.
Yes.
Don't forget that there's always some report or the other of, an industry. Government's always having white paper. Government's always evaluating. So General Obasanjo commissioned the OGIC in 2001. But we shouldn't keep dating, even though what evolved into the PIB
is what we have now.
Exactly. But It still doesn't mean that because when we say that we beat ourselves too much, we've debated the PIB vigorously, and I think we have a very good PIB, or PIA.
PIA, yes.
And we should, but we have very good laws, and so the fight now is how to ensure that we implement these things to the letter. Don't forget the Nigerian electricity reform is one of the most progressive acts on the planet. South Africa is still largely government-led, one company, transmission, distribution, Egypt is still largely, and those are the two comparable economies,
Right.
They're still stuck in government mode. We have deregulated, essentially, the electricity market, but we haven't done it well.
Implementation,
which is why I talk about these marginal fields too. This whole idea of rent, of You know, you've got to give it to somebody, whether it's going to deliver or not properly, not properly doing the moderation of competition. You know, that's the part that we get wrong. You know, and we did the wrong thing in late 2013 and we're stuck with it. Now, 8 years down the line, we still do not have a proper electricity market. You know, so so those are the kind of challenges, and we need to be very, very careful. I mean, and I will call, and I will wish that the oil industry itself, you know, is bolder. You know, they are businessmen, but they should talk more. They should engage, you know, the government openly more, not
back office.
Exactly, be hoping that the media can solve the problem for them. You know, that happens too often. If you run essentially, if you run a media, you know, on energy, those are the kind of challenges you have. People can't speak with you, because, you know, something will happen, you know. If there was strong advocacy, you know, from the oil industry, we would have passed the PIB eons ago.
Right.
You know, even the industry itself wasn't vigorously pushing its own case, you know. But so essentially, what are we talking about? One area that the minister has tried to respond to in that briefing that we both saw is the host community.
Host communities,
and I was hoping it was clearer around it, because it's one of the best parts of the act.
Why? So you're okay with the 3%?
I'm okay with, and let me explain how it is. You know, when we say that operating expenses, what it means is that Rotu's company, you know, a manufacturing company, spends 200 million naira every year on operations, you know, which is usually a large sum of money. And we're saying that you will commit
3% of that 200 million.
That is not profit. Right. You know, usually what you're laying out is usually large. Now, the difference between, and you know, operating expense already, we're charging this 3% operating expense for the NDDC. Okay. And they don't do any, well, I don't want to, no. I mean, we don't see the evidence of the money. I mean, let me not seem like I've come to, you know, we don't see the money.
Yes, I understand what you're saying.
But this is a situation in which the law, and that's why I say it's progressive, has provided the governance structure for, so unlike NDDC in which you just pay the money, and there's no way that we know how it will be spent. You know, it goes to governors, you know, they can spend it on real estate in Lekki and they're in Delta, you know. I mean, you know this.
Of course, you know, we are aware. We're very aware.
So the thing is, so you have this amount of money, and they say out of this money, and it is also localized. Okay. So unlike NDDC that is global. So if the Ondo State governor has the money from NDDC, he probably will. It's not. Nobody, you know, is compelling him not to spend that money on Akure, which is not a producing city. Yes. You understand?
Of course.
But in this particular case, for the host community case in the PIB, is that it is local. So the company that is operating a certain field, you know, in your community,
is going to derive that 3% from the operating expenses.
Exactly. Right. So it is that community, it's nobody else, you know, that you then set up a trust fund. And you then have, the law tells you that you can't spend more than a certain percentage on administrative costs. You will have to spend over 50% on capital expense. It means that you have to spend so amount of money to build schools, to construct, to put water, to run. You know, that law says all of those things, which is what makes it different. But in terms of the volume of money, so which means also that, I mean, there's those community trust, you know, in a place like Sapele. Okay. You know, and if there are 5 different companies that are working in the vicinity of, say, of Sapele. There are host community trust funds in all of those
Scattered all over
areas.
those
Yes.
areas. Right,
And
right.
they're doing one thing or the other. As opposed to, Governor blah, blah, blah gets this and it doesn't even go to anybody. So it's so specific. So it goes directly to source.
Mr. Akinosho, we have to take a break. I will have to ask you about, because you've explained this so well, and that doesn't seem to be filtered through. But let's hang out. We'll be right back with you. It's the Global Business Report on the Rise News. We'll be right back to continue the conversation. Stay tuned. Welcome back to the Global Business Report on Arise News. We're speaking, of course, with our guest, Mr. Toyin Akinosho, who is the publisher of the Africa Oil and Gas Report. We're reacting to Minister Timi Presilva, Minister of State for Petroleum Resources, comments on the Petroleum Industry Act, which he has deferred to President Buhari tomorrow. Mr. Akinosho, you were just going through it. We're on the touchy subject of host communities. We had a guest earlier on Newsday from the the Pan Niger Delta Forum. And I mean, he was quite upset. Yes, he was saying that the 3% allocation to host communities is an insult. I mean, we even have it, I believe, in today's This Day newspaper. So there's a lot of agitation. But the way you have broken this down, to take 3% of operating expenses, which is an outlay, which is standard, as opposed to the risk of profits, and I would like for you to keep going where you left off, but is the government explaining this properly in this Petroleum Industry Act?
Well, the thing is that, what we say in mathematics is that if you go back to the first principles,
yes,
what is this about? And that's, you can only find that in the act itself, in the bill itself. And people need to, especially those of us who do this job,
yes,
we basically also need to be reading some of these scripts themselves so that we can explain. A lot of so-called advocacy groups, respond to the media.
Right, right.
I've been there. Anyone can send an email. Anyone can respond to anything. But the thing is that, have you read for example, I was, until the guest, your guest came to explain, what exactly the profit oil part of the frontier
exploration.
It's not necessarily NNPC profit as it were, And, he also explained, that profit oil meant only deep water. It's still a lot of money.
Yes.
And I still don't think it's government that should be spending money on frontier exploration. And I will tell you, we can discuss frontier exploration next because, a lot of these countries that are in the frontier, yes, Mozambique and co, do they have that kind of money like Nigeria? They don't.
Small.
But people are investing. Why?
Total, for example, in Mozambique.
Exactly.
$15 billion.
Exactly. Total. This same Total is in Uganda.
Right.
Now the Ugandan case is worse. You're talking about Mozambique. That's deep water.
Right.
And you're taking gas. Export in Uganda is a landlocked asset.
Right.
Which is 1,400 kilometers from the coast. So it means that you run a pipeline.
Wow.
And it's not, Uganda doesn't have a coastline. Uganda is not on the South Atlantic like we are.
Right.
So Uganda passes through Uganda, it then goes to Tanzania, and that's where you export. It's a lot of, forget even about the cost, it's a lot of Herculean logistics. For a company operating in Nigeria to spend less in Nigeria and want to spend a whole lot in those places means that it's been given
the freedom.
Those kind of incentives that allow you to. That's what we're calling for. You don't have to keep saying that you have to spend government money in order to do that.
So the private sector can pick that up. They can pick up that tab.
Exactly.
Right.
That's what we should encourage. It's always very funny. Okay, because the Nigerian state, Nigerian officials, they tend to feel that, but we have all the crude here. Those guys are minor. They are minor, but they add up.
Right. You're talking about the Ugandas and the Mozambiques, right?
Yeah. At the end of the day, all of what Uganda has, is not up to 2 billion in terms of proven reserves.
Right.
In terms of what you might call the entire reserves, which cannot be recovered, because there's reserves.
It was commercially viable.
And there's what you can take.
Right.
I mean, there's water in your, when you drill your borehole, you can. It's not all the water
that
there that
drink,
you can.
right.
No, that you can pull out.
Pull out, right?
It's
Gotcha.
just not possible.
Right.
So what you can, so Uganda is relatively small, but they are investing there. Mozambique, all of that 100 TCF, but they've invested enough to be bigger size than even our own NLNG because the atmosphere, is better for them. That's what we should do, but we can do it in a whole lot of ways. It's not just PIB, a day-to-day regulatory function by people in DPR, a day-to-day regulatory function by people in NMPC, the kind of things that we do as individual Nigerians, even private sector. I've been in conferences where someone is asking me, you mean whenever you take money to Nigeria, you can't take it back? The things that we do collectively, is all part of this business environment that people speak about. And it has an impact. It has an impact, long before now, a company called Tullow Oil, told me this was in 2004. They won't come here. Yes. I mean, this, and because you speak with one official, you speak with another official, you talk to one or two people, and everybody seems to be dodgy. I mean, what kind of people are those?
It does
disincentivize you. So let's go back to host community because that's very crucial.
Yes.
So it's local, which is what makes it different from NDDC. It's also a lot of layout, and because it is operating, you're always having operating expense all the time. For example, if you don't manage to produce, you might not get your profits.
Exactly. So your profits will be impacted in that fiscal year.
But you will still spend
your expenses for that year to get the profits.
So government has compelled you to spend 3% of that. And the thing is that, so what it then means is that, let's say there are 2,000 communities in the Niger Delta that are host communities that actually have hydrocarbon running. It does mean that all of those people, all of those communities will benefit from those funds, as opposed to some global thing that is not reaching anybody now. Do you know what? Even the gentleman who was screaming yesterday, if you ask him, ask him a question,
yes,
has GMOU worked? He will say yes. But GMOU is something that the companies themselves decided to do. At some point, they realized that they will build schools, the communities will say that's not what they want. That no, what they will do is that let's come together and agree on the kind of projects you guys want, and we'll put some money. And that money was, it wasn't, it's not legislated like this. So they could put anything. So Chevron could say, for Kula community, we're spending 100 million naira this year. To tell you the truth, that can't be anywhere close to
what would they be getting from this particular 3%.
But they're excited about it because that was the only thing that was happening. The governors never spent money on them. So those little things that were called GMOU were what was happening. But now government has legislated that you will spend this. So in Sapele, in Uyo, in Baramotu, I'm looking for names, in Buguma,
it all feeds in.
All of those people, everyone that produces, not produces even, that a company actually operates in that place,
will benefit from
it
3%.
would set up an host.
We are almost out of time. I wish you could have it for more longer, Mr. Akinosho.
No problem.
A minute to go, 1 minute. Very quickly, there was also the issue on Newsday this afternoon about the bill forcing the communities to protect the assets there. That is, if there's any damage, it will impact what they get from the 3%. Very quickly, if you can, in 30 seconds or 40 seconds.
It only makes sense.
Yes.
I can, because the operating expense, if you damage my stuff and I can't produce oil,
Then
I
why
would
should
still have to
pay you?
I would still have to come with that money because it's operating expense. It's not profit.
So
I mean, something has to happen.
we should have you. We should
something
have you
has to
explain the
happen.
PIA to the rest of Nigeria. Mr. Toyin
Thank you very
Akinosho,
much.
publisher,
Pleasure.
Africa Oil and Gas
Pleasure.
magazine. Thank you so much for joining us. Really appreciate your time.
Thank you.